Hi, I'm Kristy Fong, based in Singapore, working with the Aberdeen Asian Equities team. I co-lead the Aberdeen New India Investment Trust with James Tom, and the trust is focused on delivering long-term capital appreciation with dividends secondary consideration. So India always has had a large population, and we've always liked India for the growing middle class story. Now, China has also been the other country that has attracted investors because, of the large addressable market. But unlike India, they're seeing the reverse of having more of an aging population these days. So, yes, India is grabbing the headlines, for being having the right demographics. But that being said, having a large population has its pros and cons. It's really good only if you have job creation, you have income per capita rising. And that's certainly what we are seeing today, and we have greater confidence around it. Previously, India was very much known for being services driven, consumption driven, and the missing piece has always been manufacturing. Now, we've made a few trips to India, and it's quite clear that there are a lot more activities going around infrastructure, manufacturing, and certainly a lot of interest of companies wanting to diversify and having a China plus one strategy. So there is clear optimism from the Indian corporates we meet today. So that bodes very well for the future of India, and having that large growing middle class. And the middle class story is still one that has more legs. If we think about how India has about 300 million households, only 50% have a washing machine. About a third, have the ability to spend on discretionary items. So one can see that the growth runway is very long, and if you have the right company with the right strategy and the financial discipline as well, because, India will go through its cycles, that actually makes India a very attractive place to invest in. And that's how we're thinking about it for the trust. We've always liked the consumer story. We have a bit more in staples, and trying to build up our ideas within the discretionary space. Financial services is one that's always been attractive to us. That includes banks and insurance, and also an online insurance platform as well. So that continues to be the themes that we like and will benefit from, India having the large growing middle class. Increasingly, we're seeing more opportunities in industrial names and utilities, and both of these areas benefit from the capex cycle, and we continue to find good ideas in domestic oriented names within healthcare and real estate as well. So a range of options that we have in India, and with more listings in the new economy names, that also increases the universe we have. So we have both traditional offline companies, but these companies are also investing in digital and also more online focused corporates as well. So that's how we're positioned for the New India Investment Trust. So we bought Titan Industries at the start of the year. Titan Industries is a consumer discretionary name. It has its core business in branded jewelry, and it also has other segments in eyewear, ethnic wear, and watches, and so on. But really, let's talk about and focus on the jewelry business first, because that's the key contributor. And I think talking about this gives one a flavor of how, there is opportunities in India with regards to the growth one sees, and also not just the penetration story, but also the premiumization story that makes a lot of Indian companies very attractive. So Titan is the leading jewelry company in India, but it only has 7% market share because a lot of the industry is still dominated by the informal, unorganized segment. So they are chipping away and gaining share from these unorganized players. And again, if one sees how affordability or rather income levels are improving, that also makes it, that drives the propensity for people to buy branded jewelry. And what makes Titan interesting, or rather have the right strategy, is having price points across different categories, all the way from luxury to the mass market. And they continue to penetrate the country as they expand their retail presence. So, it's a company that grows about 20-30% annually. Now, again, India is if you think about the addressable market, there are lots of opportunities here. But because they are run sensibly with a good strategy, with the financial discipline, good balance sheet, and also having the trust in the brand, that actually enhances their moat, and makes them a credible player that's again gaining share from their weaker competitors. So that's a company we like. We like how they think about premiumizing their portfolio. They offer good designs as well that attracts many Indian consumers. We like that they're also thinking ahead and diversifying outside jewelry into the other product lifestyle segments, and the way they manage cost and manage the balance sheet. I think all these makes it a good long-term quality company, which is what we tend to look for in our investment trust. For more information about the Aberdeen New India Investment Trust, please check out our website or click on the link in the description.